Hello, hello, hello. Happy Friday, everyone. How is everyone doing? Let's see who's here. Good morning, Martinez. Good morning, Patrick. Good morning, Tony. Hey, Sterling. Hey, Royal Palms. What do you mean is 1987 repeating? Uh, a little more context. Uh, Yeah, Harker is speaking now, and Israel Sterling is putting in the news. Reports have been received. Oh, fantastic! More good news on OPEX, 1 trillion notional OPEX expiration. Remember, this is just a monthly expiration. 1 trillion is pretty decent in size. My least favorite trading day of every month is OPEX Friday because it's just a back and forth mess generally, but we have to see how this one plays out. Breaking down from some key levels. So we got Harker and Mester. Harker's speaking now. Sterling's with putting the news in the feed. Rig counts, and that's about it. Rig counts, and that is about it. And just to follow up, not much on Monday. Today's big thing is going to be OpEx. So far, uh, pretty sort of a weak market, especially from the mega caps going in. Tesla's trading at very key levels right now against the 200 and possibly a key support level. Looking to break down from that. Real estate, energy are the only things that are up. Let's just refresh this star. Right, real estate still up, energy, and then everything else is negative. With basic materials, consumer, cyclical, technology, and comm services leading down so far pre-market. Fed watch. It's basically baked in for the pause in November. Pause in November and the pause through May, even though who was out earlier saying it would probably be until the first cut, I think it was a Barker, was for the first cut at the end of 2024. So that's where it differs from the little Fed Watch tool. Fear and greed still dropping back down and close to extreme fear again. Where's the cocoa bounce? All right, we have American Express is the only key thing I was looking at this morning, which was a beat, but down after their beat. I did not see their charge off numbers. I have to do some more looking into that after the open quiets down. Really, not much else for today to talk about in terms of earnings. So let's get straight to the markets. Good morning, Jacob. Yeah, we're going to see a recession, and we might not see inflation get down there close soon. We are in positive or negative gamma. Where's that looking like going into rollover? I did not. I did not actually check that this morning. I've been very, very busy, and I did not check that. That was a good question. I should have. So if anybody else has that information or can look it up real quick, it would be interesting information. I'm sorry, I do not have that. Because if I look it up now, it's going to disrupt the feed. Let's see. Let's see where we sit. So we had the double top, which triggered on that 4 hour, not on the daily back on Wednesday, but on the 4 hour. You got the follow through, hit the first target yesterday, close to the second target today, but this is a cluster area 42.84 to about 42.79 is where we sit right now. The 200 simple, right at that 87.5 in the final target for the double. Don't know whether that's going to hit this morning. Martinez says it looks like a flush morning. You know, we start breaking towards the pre-market lows. Yeah, I could see us tagging this 87.5 area, which we've had back at the beginning of October. That was the buying pressure down there. So I could see that if we really take out the pre-market lows, but then I'd be watching for more of a bounce into the afternoon if that were to happen. Remember, not everyone, but roughly 78-80% around there of OPEX tends to be choppier. Choppy back and forth swingy mode rather than full-blown trendy mode. There's only, let's just go with the 80-20 rule, roughly. So do keep that in mind. Looking at this, that we just have a little horizontal. It's not any double or anything else, but a break above 4,300 would be into a clear path move and above the 1 hour rotation zone. So it could get a little bounce above 4,300. Key support you see is coming in at this about 42.84. 42.83, 42.84. So those are the levels I'm going to be watching going into the open. The bigger term levels on the sell, if we break that 42.83 area, 42.60, if that were to be taken out, 42.35 is critical. Now, bigger picture. This is actually now setting up going into the end of October after the OPEX day, assuming we don't close below. Remember, low close was from October 3rd. So on a closing basis, if we come down here, I'm watching October 3rd on a closing basis. On a low basis, I'm watching October 4th. I'll keep an eye on both of those because closes are more important than lows. But we're at this still. We've been making lower highs and lower lows, so we're going to get to a critical juncture. If this holds, and then it can take out the Friday the 13th high or Thursday the 12th high area, it could have made then a potentially higher low and it breaking this pattern going into November. But we're sitting at a very critical juncture. Daily cycles getting to the bottom, but not yet there. Weekly cycles getting to the bottom. Also, on the weekly basis, we have the 50 EMA right down here. So, ES potential daily double bottom on the right-hand side. It still works. If we come down here, though, if we were to unanchor this and come down a little farther, so it would have to really hold this, because if you get down this 87.5 and test this 200, it's pretty much off the table. So, yes, technically at this 75 level, if this holds and then we rally next week, yes, you have a little mini double bottom, and then that could also change the pattern with what I mentioned, because then we could go into a higher low, higher high, and then retest this areas going into November. So overall, this is very key. The NASDAQ, very key area on a closing basis is the close from, which day was it? 14.7, 14.50, 14.7. So it's the closing day from October 3rd. And the lows, we have like a triple low area, but the low area I'll be keeping an eye on is from the 27th of September. So those are the two key areas. Now we've come down. We've hit the next harmonic cluster. You see right here at the 75. By the way, there would be no double in the NASDAQ. No double. We already had that little mini thing play out. If we break below this 14,800, 14,696 of roughly 14,700, then this 14,856 area. Okay? So that's what I'm watching into the open. Into the open, we're looking at a little resistance shelf about 14,870 and the support shelf is 14,810. If we do break below that, I'll be watching 14,800. Now also remember, please, on any bounces, we're going into the higher time frame rotation zones. A 4 hour and now the daily is crossed over. So the Dow is not yet. We're trading against the minor harmonic right here. The key levels 33,342. And yes, that could also potentially set up a little mini double in the Dow if then it were to move back and close above the 17th of October's highs, but we're not yet there. It would have to push down. If we break below 33,342, 33,182 is the next major level. On any rally, about 33,663. Don't need to dwell on that. The Russell breaking down, coming into about the 1,700 key support. That's what I'm watching this morning. If that were to break, the next major support level isn't down to 1,683. And on the bigger picture, you see the Russell's trading against some very key support areas. 1700 is very key. So keep an eye on that. On any bounce in the Russell, it is not a double. Any bounce in the Russell, 1713. And then if it can get some traction above 1713, you might see a rally, but I'd be keeping an eye on the 4-hour rotation zone. The VIX, this is also interesting from the bigger perspective. So remember, the key support at this 1275 to 13 held. We came up, made a higher high, lower, higher low, and now we're breaking out to a higher high, especially with yesterday's close. Yesterday's close was the highest close since roughly back in March, the when we were coming down from the banking crisis, the minor banking crisis. So this is now changing a pattern, a distinct pattern. So keep an eye. We have volatility coming back in. All right. So keep an eye on this. This is definitely changing the pattern for volatility, and we're not yet at spiky areas yet. So I'm also keeping an eye on that. Not necessarily, I mean, today, again, it's OPEX. But going into next week, that's what I'm doing. The DAX yesterday broke the key support. Now's trading. The next key area I had was this 14.9 roughly. 14.9, which we're trading against right now. And then if we break below that, the next key area is 14.720, 14.715. You get below that, it would not be very good for the DAX. Overall, if we're looking at the bigger picture, from the run-ups from last October lows to the highs, this gets key, because if we start breaking this area, this 37.5 area, the 50 is a very strong magnet target. Any bounce now, 15,200 is key resistance. The notes, really trying. I'm going to go to yield, because I would not be surprised to see this hold at least today. But then we might have a single bar pause. Pay attention to the yield. Why? Because the yield high, 4.99. We break through that 5, and remember, I rounded this this harmonic target down. I think I talked about that on when I was on with Bob and Jim, to the 5. We talked about, and they talked about how, how the key numbers, like I know Jim talked about this with the 5 being a very key number for positioning and everything. If this breaks through, again, not necessarily today, but if this breaks through, we could see a pretty quick ramp up, which the Treasury market would get interesting if the 10 years lose the 5, go into the 5 handle. So keep that in mind. I know we looked at the TLT the other day, and that's just heading lower. This is why, unless you get some kind of, you're fighting the trend in this. You're fighting the trend, and the double is off the table, and it never even triggered the single little potential reversal pattern. This is a falling knife. All right. So things could get interesting in the bond market if these yields keep rising. The 10-2s also. The potential double is off the table, but remember, as I've talked about for how long has it been? It's been for months. As we get close to that 0 and then start accelerating above 0, it's generally very, very bad for the markets. And we're closing in. We're at minus 13.5 basis points. Does not mean we're going to get there today or anything else, but we've broken above the highs in April. We've even broken above the highs from last September. So this is not a positive from a pure market analysis perspective. Good morning, Anissa. What are my entries? I personally watch for my percent B entries, my percent B buys and sells. So, hey, Amit. Can I just let in the money credit verticals expire without closing? You can. You don't have to close option positions. The only, yeah, and if they expire worthless, you'll get as in the money credit. So you've already collected. So yes, you can. But if they if it's gonna be close to a strike price, I do buy back the thing I'm short. Okay. If it's going to be close, because anything can happen over a weekend, and remember, option assignment is through Saturday morning. That's the only time. Otherwise, if it's nothing to worry about, I don't care. Hey Heinrich, thank you. Longer duration yields above 5. Wouldn't this cause bigger issues in the economy with more things breaking and possibly the Fed causing more harm? Yes, in my perspective, it does. Dollar index still very choppy. Watch either a break below 105.60 or a breakout above 106.30. Those are the key areas I'm watching. Crude stalling out at the first target from the double. So it's a stop raise right now. And look at that 62.5. We had the 62.5 right there. If we do rally back and close above 89.96, I just watch for the close above 90. Not only do we have the double still in play, we have the 87.5 rule in play. Let's see. Rick Santel, I went back to 1980 and I did some cycle updates. We would need to close above 7% in the next 2 years to reach 13% on the 10-year. Oh, boy. Well, we're not close to 7 yet, but things are getting interesting. Gold, I'm watching today. Now, this does not mean this is getting very overdone, getting close to overbought. So I am watching now for at least a short-term pullback. Okay, but we broke. Did hit the next target area. This 1987. Now I'm watching where it closes. Why? Because we closed above there. I'll be expecting, not guaranteed, but based off probabilities, I'll be expecting to trust this 2052 level and the highs from May and from April. Okay, but if it closes above 1987.2, that does not mean it has to go there instantly. We could see a pullback first into a key support area with the rising rotation zone with the 200. So watch for that if you're keeping an eye on gold. Japanese 10-year getting this 85 and some stalling out. The yen, still, look at this. Look at this range. If the yen starts getting above 150, it's going to get interesting. There's been some selling pressure and it's coiling up here, but this would be a rising triangle. So I'm keeping an eye on that. All right, and then I think if this breaks, we'll have to see if they don't intervene. Then we could see a quick run to a retest of October 22 highs. Things are getting into very interesting situations. Not much in the euro. We still have the potential double in play. The pound, you now have a potential double in play. Remember, these are only potentials. They may never trigger, but that would be on the bigger perspective. Then we would start watching for dollar weakness. Our favorite, spiders and the Qs. The double is over now in the spiders. It closed below the 62.5 yesterday from the revised target, so that is over. The targets for support, 424.69. That's if we're trading 425.60, so 424.70 roughly, and then 422.43. To the upside, I'd be paying attention to yesterday's low, 425.73. We're just below that now, but then that would be the quick gap fill potentially to 426.43. Above there, 429, 429.15. So those are the targets there. The Qs, which we did not have the double pattern in, did not close below the 62.5 yesterday. We're trading 359.20 right now, right just in front of yesterday's lows. So if we start breaking below yesterday's lows, 359.16, the next key target isn't until about 357, unless you use minor targets. The minor target area is about 358.65. Any bounce, the close 359.97, so 360 is roughly your key resistance. Above there, you're not looking at much till about 362. All right, yeah, gold is looking good. Remember, this could be setting up a lot. It's from a lot of things I watch and analysis I don't necessarily do on this channel. I'm watching for a multi-month bottoming pattern in gold. So be aware of that. Tesla trading against very key support. Still the big double in play. It's a little sloppy because of this move up in June, but it still qualifies on the higher time frame. You can see it on the weekly. And if you want to trade this, I'd need the weekly close below 212.36. Weekly close below 212.36. The other key area is 207.47. Roughly, you see the weekly 200, and that would be the 62.5. You get the close below that. We could be kissing Tesla goodbye in the short term to retest some of these key low areas, especially the low area from April. And if we break below that, and Tesla's got some heavy lifting to do at this point. And if we break below that and then close below 175.87, 126.50 could be the target eventually. So for the Tesla bulls, keep those levels in mind. Keep those levels in mind also from the channeling perspective. Okay, from the channeling perspective, you're breaking below this key channel. I'm more watching where, the double pattern and the 62.5 levels to really set up triggers. NVIDIA, look at this. I just want to point this out. So this is the weekly chart again. Held the rotation zone back in August. Held the rotation zone in September. Barely holding on right now. You remember I set the alarm here. A few weeks ago. Still, even though we don't have a double top, this is very key. This 403, 404 area. Also, you break below that, not only would you be breaking the weekly rotation zone, we would be making, so far we have a potential lower high. We need to break through this 403 area or 404 and potentially make the lower low and change the pattern in NVIDIA. And remember, NVIDIA, still market cap of over $1 trillion and still trading a P to E ratio of 102. But that would be another mega cap. That could be faltering. So keep an eye on with our mega cap. I watched the 5 ones were coming back down. Remember, so we had the potential double top, which was never triggered, confirmed but never triggered on the weekly basis. And we start breaking below here. Watch out in the market below. Clorox. Does it have a potential daily double bottom? That's going to cost you, Sterling. It's trading against that nice little harmonic. Let me check it. Oh, it's technically, it works. It's lopsided, which lopsided is lower the probabilities. But that could be a return to the weekly rotation zone should it trigger. If we rotate back down here again, though, it's done. And it's against the rotation zone, so you got to be nimble. Not only is it lopsided, it's against the rotation zones. Okay? But yes, it's still technically valid. What else? So, again, I wanted to do a little more longer term thinking because it's OPEX Friday and I'm not putting a lot of weight into today, even if it rallies. I want to see where these next couple weeks to end October are going to be critical. Critical. So, Apple broke down from the channeling pattern. So I'm going to be keeping a key eye on this after never closing above the 62.5. So Apple, we could be coming back down to easily test the 200 again. Not necessarily today, but some of these mega caps, Microsoft and Apple are holding up better than stuff like Tesla and potentially Nvidia. But if they start rolling, you see all the selling pressure in Microsoft on any rallies up here. Keep an eye on those even if you don't trade them. With that, we're going into the open. Let's just take a quick peek. Still about I'm on the S&P. The S&P still about 14,303, 14,283 are the key levels I'm watching. But remember, unless we get massive momentum, even if we break some of these key levels, I'll be watching for potential reversal patterns, especially with the tick. Everyone have a wonderful trading days. Where'd that come from? My money was losing 7% every year due to inflation, so I decided to invest in the stock market. Now I'm losing 7% every day. Oh boy. Where'd that quote come from, Sterling? That's a good way to end. That's why you got to learn to do stuff correctly. Also, one other thing for the people still sticking around, remember now, if we just close, not necessarily for today, but if we close below this low from the 4th on the S&P, it triggers another very reliable intermediate sell signal for me. Then I will be watching for at least a pullback to the 50%, which is 4,000. I mean, I'll be looking for a pullback probably to around 4,000. But again, not today, but keep an eye on the lows of October 4th on a closing basis for the S&P. There we go. For the people who stuck around, that's a little bonus to help you. And I shall talk to everyone next week. Bye for now. X account, not Jerome Powell. Well, that's a good one, Sterling. Thank you for putting that in there. Everyone have a fantastic weekend, and I shall talk to you next week. Bye for now.